Hi, this is Tom Nunemaker with Capital Discussions. I wanted to do a midday trade update because I just put a new trade on the ES futures options. Now, a lot of you might not have traded futures options before, but they're very similar to regular stock or index options that you're used to trading. Slippage might be a little bit different, fills are different. They do trade 24 hours, so you can adjust them in the middle of the night if you want to. But let's talk about the trade. So right now you're looking at a 2-day chart, 3-minute bars. Left is yesterday, the right is today. I saw that market was selling off, so volatility is picking up. So right around in here, I started putting on this futures options trade. And it's basically the same as my index option trade. It's a broken wing butterfly, and ES is basically like the S&P 500. It's just the futures, the E-minis. So here's the trade, and remember for the ES, it's $50 a point, not 100. So really you're kind of doing, if I'm doing a 10 by 20 by 10, that's almost like doing a 5 by 10 by 5 on the SPX. And you can see the margin. Now I hit in option view, if you click on one of these column title or column headers, you'll limit your analysis to only that column. So this is my bearish put vertical that I put on for credit. Remember, I bought these for 18 and later sold these for 18 and a quarter, so I can't lose on this. So this trade looks like that. It's completely above the zero line, 100% chance of making money. And this one is the new trade. And if you look at the margin, it's pretty impressive. So I actually did an 8 by 16 by 8, and then I added two bearish put debit spreads. So that ended up with a net credit of $691. The margin I'm using is 5,700. So if we do the math, let's see, 691 divided by 5769. That could be a 11.9% return, so much higher than using index options. Margin is pretty low. Remember, futures use span margin, so it's a risk-based margin. The nice thing with futures, well, a couple nice things. You can trade the underlying, so if I want to get some quick deltas, I can just, go like short a futures contract or long a futures contract. Depends on what I want to do. The other thing is, well, it trades 24 hours, and to get your risk-based margin, you don't need a portfolio margin account with 125,000 in it. You just need to have a futures account, which could have 10 or 20,000 in it. So if you had your $25,000 futures options account, you could put on one of these trades with no problem whatsoever, and it's all risk-based margin. It's not Reg T. So here's my risk graph. I'm nice and flat. I put those two spreads on instead of one. I looked at one initially, so I started out with this. I had a 9 by 17 by 8, and that gave me this risk graph. I wanted it to get just a little bit flatter, so I added the other debit spread. I gave up, let's see, 914 down to 691. So about 200 and some dollars that I gave up, but I really improved the downside, and I flattened out the T plus 0 pretty well. So if we look at the T plus 19 line, it's 94% probability of profit. Profits could be pretty nice in here. We can get up in the $1,000 to $2,000 range, which would be a really nice return on $5,700 a margin. Now, if we do start moving down, remember it's a risk-based margin, so the margin will increase. However, we're only max going to lose 13,000 on this trade if we let it go to expiration and it expired below 1870. So we're not going to let that happen. But if you base everything off of 13,000 for your margin, even $691 divided by 13,000 is still a 5.3% return if everything expires worthless. So if we stay above 1950, that's a pretty good return of 5% or something like that. And we do have a good possibility, if I make this so you can see it better, zoom in. So we could, have some pretty nice returns in here. we'll keep on top of it. Obviously, if it can get up in this area, this would be really nice. You can see the P&L down here. I wonder if I put the yield on. Yeah, so here it's showing me the yields, which are kind of crazy yields. But it was pretty easy to get filled. I didn't really have any problems. And yeah, we're just kind of letting it go now. So 29 days to go to expiration. And they do have weeklies on these things, so we can do the same strategy of selling every week if you want to. So that's my quick update, and I'll update you at the market close. But here we are right now, just kind of bouncing around. We sold off, bounced up. Now it's trying to decide if it wants to go up or down. It might come back a little bit. We'll see. But that's where we are right now, and we still have another 3.5 hours before the market closes. So see you later. Bye.